So what's multiplier for your business? Also very important point to actually understand. And often people come to us with these, they do mainly on Excel, they'll do just some calculation and they're gonna go times 2, times 3 or times 5. Well, the difference between 100 times 2 and 100 times 5, it's about 5 times. So I'm gonna give you an idea how the people looking actually on the different investments. So you gotta compare your business to other investments that any buyer can actually invest the money in. For example, if you invest money in government bonds, you're looking about 5%, a little bit lower at the moment, but depends on what government bond you actually invest the money to. Like if you invest in Greek bonds, you're going to get way more, but I wouldn't suggest you do that. So that represents about 20 times multiplier. So I'm happy to get 5%, which means on my $100, I'm going to get $5 every year back. So that's a 20 times multiplier. Next is commercial property. If you take any commercial property, you're looking, that's return, rental return, plus some capital gain. You're looking somewhere between 7 to 10, depending what type of the property and where the property is. After that, you go to share market. Share market, 10 to 70% accepted returns. So you're looking 6 to 10 times multiplier. Below that is a private business, okay? So no one's gonna pay more than 5 times because it makes more sense to put the money into shares because it's liquid, you can sell it like this, you just one click and you get your money back, and it's also totally passive investment. You can keep your job, do whatever you want, it's gonna make you money on the share market. Now, private business is somewhere 1 to 5 times. So maximum you're gonna get for any private business, unless you get super lucky, but that happens one, and I had one case in 15 years that somebody got 7 and they were not selling business, but somebody approached them. Now, just to give you an idea, we see about 1,000 businesses a year. In 15 years, well, first year I wasn't seeing 1,000 businesses, I was seeing less. So let's call it 10,000. So chances of that are 1 in 10,000. I don't know if you're a betting person or not, but I wouldn't put any money on 1 to 10,000 odds. So you're gonna get somewhere between 1 and 5, all right? And it's a big range, so I'm gonna try to answer this question to where your business is. Is it a 1 times profit or 5 times profit? So multiplier for your business. So what we've done, we said, okay, let's make this 5 times multiplier. Let's make this imaginary business as a benchmark business and say, okay, this business will attract 5 times. But it needs to be established for minimum of 10 years. You're not gonna get it 5 times business that you just started yesterday. You need to have audited financial records. So it's independent auditor. It's not what you give to your accountant and you sign off, but actually independent auditor, audited those records. Complete management structure, board and management in place, which means you don't run the business, but there are different layers of the management and the business run itself with some sort of input from you, which is mainly strategic input. EBITDA needs to be minimum of $1 million. So you're not gonna get 5 times for something that's making 300 EBIT. It has to be minimum $1 million. Sufficient number of employees that if you lose today 20% of your workforce, you still can run a business without too much interruption. No customer should represent 5% of your business. It's kind of logical because you don't want to have all eggs in one basket, but I have seen and we have sold the businesses that have only one customer. Not a pretty place to be in, but it does happen in business. Established market position that actually you've been around, your first mover or you've been around long enough, did you have an established position on the market that kind of protects you from the others? Strong customer suppliers agreement in place. Very important if you do any importing or any representation of someone else's product. Most processes in operation manuals need to be in place. No reliance on the owner for day-to-day operation, increasing profit, clearly defined future opportunities, and non-declining business industry. So you can't expect to sell for 5 times retail at the moment, all right? So this is 5 times. This is the business that's gonna get you 5 times. And most of the small businesses currently in Australia do not fulfill most of these points. So where are the deals? All right. So currently deals are about 3 times. Okay, so if you're making $500,000 in a business and your wage should be 100,000, your profit is 400, you will get that somewhere between 2 and 3 times. Could go a little bit over 3 times, could go a little bit under 3 times. Very rarely goes below 2 times. And that's driven by the owner, because if the owner gets pushed so far, then they say, well, maybe selling the business is not the best way for me to exit. Maybe I should close it down, sell off the stock, run it for 1 or 2 years, and then give it to the family and let them pay over 10 years. If I get the money, I get the money, I'm still better off. So the deals are happening somewhere between 2 or 3 times. Most of the businesses sell around 3 times EBITDA, which is profit after the owner's wage, but a little bit under or a little bit over, depends not so much on your business, but how do you run the process.